Hey guys, welcome to Money Valley and I'm Manish. I'm going to teach you today how the weekly Bank Nifty option strategy works and what this strategy is all about. So we are going to learn each and everything about this strategy, how this strategy works, what are the entry points, what are the target points, what is the time frame which we're gonna use, and how we can book ultimate profit from this strategy. So this strategy is all about losing 10,000 rupees versus a profit of 50,000 rupees per week. It means there are 4 weeks in a month, and if you try this strategy and if you are continuously losing your money 3 weeks, then 10,000 you're going to lose. But in a single trade, if you're going to win, then this is going to give you 50,000 rupees. So this strategy is very simple but very powerful strategy, and we are going to learn each and everything about this strategy. It means if the prices are above this line, then you're going to buy a call, and if the prices are below this line, you're going to buy a put. And if you don't know about derivatives, calls, puts, futures, options, then we have everything available on our website. You can learn them online. You can subscribe to our online classes. So let us understand how this strategy works and how you can earn unlimited money from this strategy. Okay, so on the screen you can see that these are the horizontal lines. These are the horizontal lines. These are weekly lines. It means these lines are presenting 5 days, 5 trading days basically. So if you consider, so this is a very fresh video for June month. So this is the 1st of June. You can see on the date here, 1st June 20, 2nd June, 3rd, 4th, and this is the 5th trading days of the June month. Okay, so this covers a complete week, and what you need to understand about this strategy, that this strategy is a Bank Nifty strategy. It means you're going to read the chart of Bank Nifty on 20 minutes time frame, which is already given here, and this would be placed on the software automatically, so we don't have to do anything about this. So every first day of the week, this line automatically comes, and if the prices are above this line, then it's a buy. And there is one more condition where you have to consider a simple thing, that if the closing price of the second candle is above, then the closing price of the first candle of the day, that is a Monday of every week, then you have to go for this strategy. It means you have to buy a call. So what call you need to buy? So if the closing price of the day is somewhere around, you can see the closing price is at the bottom here, just see. It's a 19,982. It means almost 20,000 Bank Nifty future price here. So the 700 points above, then the closing price here. So the closing price is 20,000, and you are going to buy a call option for 700 points above. So 700 points above would be here, and this line shows the value is somewhere around. You can see the value on the right side here, 20,700. So you're going to buy a call of 20,700 value. Okay, and the second condition is that you are going to buy that call only if the prices are below 100 or 80 rupees. So if the premium of the call 20,700 is below 100 rupees, then only you're going to buy this call. So it should be somewhere between 30 rupees to 100 rupees, then only you're going to buy that call. And how much money you have to invest, it depends on you, but probably you can, if you are starting with this strategy, you can start your strategy with 50,000 rupees for a month. Whole strategy you have to follow, and you have to put 10,000 rupees every week. It means, say for example, if you're going to buy a call for 20,700 rupees premium, say 80 rupees, then you have to invest your 10,000 rupees in this strategy. If you know options, then you would be easily getting that point. It means you have to buy a call 20,700 rupees, but the premium of that call, the price of that call, it should be below 100 rupees. So let's have a look on what was the price on the very first day of this on NSE. So index Bank Nifty 2020, the select expiry was a weekly option. So we are doing in a weekly option strategy. So this is a weekly option strategy, and we are going to select a call of 20,700 rupees here. I need to select date range as June 1st to June 5th. Let's get the data. So what it says that on the very first day, the Bank Nifty call 20,700 was opened at 64 rupees, was high for 2,275 rupees. The low and open was the same, and in between it actually came somewhere around 100 rupees. So you had to buy this call below 100 rupees. So on a very second day, if you see, this was available in the 90 rupees. So it was available below 100 rupees. So if you buy, say for example, on 100 rupees, so here you have to buy once this candle confirms that okay, you go for this. So once you buy this weekly call option for the strike price of 20,700 rupees, you're gonna go, say for example, I'm buying only one option right now. So the investment would be the quantity of this lot size, the lot size of the Bank Nifty is 20, and the premium would be, say for example, 100 rupees. So 100 into 20, it would be 2,000. So my total investment is 2,000 rupees in this strategy, and I bought on the very first day here when Nifty was somewhere here, and the price was the option price was somewhere around below 100 rupees. Now what is going to happen on the 2nd June? The high of that was somewhere around 264 rupees. So on the second day it was 264 rupees again. On the third day, if you see, so this was the third day of the week, and it touched the Nifty. Bank Nifty went somewhere around 21,564. 21,564. It means well above than our target. Our target was 20,700. 20,700, 300 points above 21,000, and 21,000 and then 500 more above points. So you can imagine that, you know, what was the high of this? So 900. You bought something below 100 rupees, or for example you bought something on 100 rupees, and the price of the same share, the call, is 900 rupees. Just imagine 800% profit on this. And basically you have to book your profit once you are getting 500% profit. So for example, the price of the Bank Nifty call 2,700 is once it reaches to 500 rupees, you have to sell it. So that is how you can make 5 times the return on this strategy. And then you have to forget about complete week. Let's consider a second scenario. So this is again a buy scenario. It gave you a small stop loss here on the last week of May, but it gave again a profit of 500 to 600% return here. The biggest and beauty of the options are your losses are very limited, and your profit spectrums are amazing. So let's consider this week. So let me zoom it a little bit. Okay, so we are considering now this week, this complete week. So what is happening on the very first day, on Monday of this week? So this is from here to here, this Monday, Tuesday, Wednesday, Thursday, Friday. So this was 18th of May 19th, 20th, 21st and 22nd. So what we have to see every Monday, you need to see whether Bank Nifty is above this line or not. So on the 18th of May the price was below this line, so it was well below here, and we'll wait if this close price would be broken by the second candle, and it happens. So what you need to do is you need to buy a put option. So now 700 points down from here. So what is the value of this? You can see the value is 18,262. So our target would be 700 points down from this line. So 18,200, 18,100, 18,000, 17,900, 800 and 700. So 17,700 would be our target. So it would be somewhere here. Yeah, let me check the value. Yeah, somewhere here. Yeah, exactly. So our target would be from here to here. Okay, now what happens, like we are going to check this week again. So this is the 18th. So let's go on the NSE and let's select May 18th to May 22, and we are now going to buy a put. So PE and 17,700. I think so, 17,700, or let me check. Yeah, 17,700 would be the target, and we need to select the expiry date is 21st. So 18th, 19th, 20th, 21st. So 21st would be the expiry date, because every Thursday this expiry executed. Let me go with the data now. So on a very first day, the first on the 18th May, the low price was 88. The open was 115, so it was available somewhere around below 100 points. So the Bank Nifty put 770 put ratio, the price was available in 100 less than 100 rupees. So if you buy this at 100 rupees one lot, it means so 20 quantities into the premium, that is premium is 100 rupees we consider. So 2000 is your total investment. I'm just talking about 2000. You can go for 4000, 6000, 8000, 10,000. You could basically go with the 10,000 rupees, 5 lots. But I'm just talking about one lot here. If you are experienced and you understand Bank Nifty lots, then there is no issue. But if you really novice in futures and options, then probably you can go to our website and you can learn our online content about futures and options. Well, on a 19th of May, so this was the May 19th start, and this was the low. Here the price was of this put was 598 rupees. Can you believe that? Something you bought on just 88 rupees or 100 rupees on a previous day, and a very next day the price 600 rupees, almost 600 rupees, means your target is achieved here. You can get out from the trade, and that's done for that rest of the week. So you invested somewhere around 2000 rupees and you made 10,000 rupees on the same investment, and that's all. That's the strategy finish here. So on the very second day it goes here, and definitely the prices expires. So this is how this strategy works. Let me go through with the many scenarios here. Okay, so this was the June. This was the May's last week. This was in profit, but a small stop loss, because started with the closing price, and what happened, it went above, and you bought here. So somewhere around you also earn. So you earn 10,000 here, you earn 10,000 here. So if you invested, so I'm just talking about the investment of 2,000 rupees. So if you bought something on 2,000 here, you made 10,000 rupees. 10,000 rupees, but a stop loss here. So I can consider 8,000 here. on the second last week of the May month, you again earned 10,000 rupees. So here again you made a profit of 10,000 rupees. Here again you made a profit of 10,000. So investment of only 2,000 rupees. 2,000, and you made 10,000, and you made 10,000, you made 10,000, 8,000 and 10,000. So this is a super profitable strategy. Just invest only 2,000 rupees per week and make 10,000 rupees. And even though the ratio is, for example, if this strategy does not work here, you are losing 2,000 rupees, you are losing 2,000 rupees, you are losing 2,000 rupees, but in the fourth week strategy works, you are earning 10,000 rupees. It means 6,000 loss, 10,000 profit. You're still in 2,000 profit because you earn 10,000 rupees, and out of that 10,000 you have already 2,000 your investment. So 6,000 loss and 10,000 profit. So still you are earning 2,000. So this strategy works, a very simple and but yet very powerful strategy. If you execute it very well, you are going to earn a lot of money from this. And so this was again profit month, profit week, and this was again a profit week. This was a sort of profit and loss mix one. This was again because March was very volatile month. So this has given you the loss, this has given you profit, this has given you the profit. So what is the accuracy rate of this strategy is basically you can consider somewhere around 70-30, means out of 10 calls, the 7 times you are going to win 10,000 rupees and 3 times you are going to lose 6,000, and you are going to win 7 times 70,000 minus 6,000 loss. It would be somewhere around 62,000. So this is a very powerful strategy, and if you want to learn more about this, you can contact us on below email address and mobile numbers, and we are going to teach you everything about this strategy. And this is a very simple yet powerful strategy. So you need to learn each and everything about this strategy. I'm gonna show you some more details about this. So these are some charts. So let me explain you this strategy with example. For example, this is our weekly line generated like this on a very first day. This, for example, this. Yeah. So this is the line. This is the first candle. We need to wait for closing point to be broken. So the closing price of the first candle not broken here, but on the second candle it broken. So what you need to do is to just buy a call of 700 points above from here, and I can show you that in the example. This is your weekly line generated, and this is your first candle. If the closing price broken here, so it goes buy a call of 700 point above from this closing price of the Bank Nifty, and this is going to give you a big profit here. So this is going to give you every 2,000 rupees you're gonna get 8,000 rupees extra profit generated. So you invest only 2,000 rupees, and in return you're gonna book your profit at 10,000 rupees. So 8,000 your profit, because 2,000 is your already investment. So 8,000 is 400% return. And this is a very beautiful strategy. If you want to learn this strategy more in detail, and if you want to learn about futures and options online, then we have online academy available with us, and you can click on the below links to get more information about. You can write us on our email given below, and the mobile number is given for contacting with us. So thank you very much for watching this, and we will be back with the new strategy. We have several strategy with minimum losses and the maximum profit realization. So just keep watching, keep learning, and if you have any doubt, you can definitely get back to us on below details. Thank you very much.